What is going on, you guys? So today I'm going to walk us through how I make around $10,000 in dividend income. And you might be saying, "Hey, Matt, this is 100% clickbait." It's not 100% clickbait, because if you look, we're at $9,700 or almost $9,800, and I'm saying 10,000 in the title. So can't get all that upset. But anyway, I can understand why you're triggered. I can understand why you're upset. But get over it. Okay, this is still going to be an educational video, and you're going to enjoy it. So for those of you that haven't been on the channel before, I generally talk about my portfolio, and part of it is basically a dividend portfolio, and then the other part is my 401k that I don't necessarily really talk about much. Generally speaking, what I cover is my IRA, my individual brokerage account, and some other small-time accounts that have a little bit of cash in them, around $208,000, and from that we get about 4.7% in dividends, and that ends up being close to $10,000. I generally work with a lot of spreadsheets, so you guys know this if you guys have been on the channel a lot, but you guys can see on the screen I have it split up by sector. Sectors change all the time, sector names change all the time. I remember somebody got upset that it's no longer called telecommunication services. Whatever. I'm not really that upset about it. But yeah, you can generally see in a table format what the percentage value of each sector in the portfolio is and what the income is by the percentage by sector. And you can see here energy is by far the largest, and it still continues to be the largest. But I'm continuing to try to shrink it in terms of the actual percentage of the portfolio. I think it's just that some of the things that I've invested in recently in the energy sector are slightly higher in dividend yield. And so while I have sold off some, say like Royal Dutch Shell, to move funds into something different, I still have an increasing amount of total income by sector. So for those of you that don't like reading tables, this is a good way to represent those things in pie chart format. So you can see the big green is my energy portion of the portfolio, and on the left you're seeing the sector weight percentage, so the total value of it, and on the right you're seeing the actual income from that. And you can see, generally speaking, it's heavily weighted towards consumer staples, energy, financials, and real estate. And I've been getting better about really trying to diversify the portfolio more. I remember I didn't really have a lot of IT. Now IT is getting a little bit bigger. It's 5.9% of the portfolio. But in terms of dividends, you aren't really getting too much. And of course, one of the smallest pieces that I have at the moment is utilities. And one of the things that was lagging, of course, behind as well used to be healthcare. With some more recent purchases in AbbVie, it's getting a little bit better in terms of the income I'm getting from AbbVie. So for those of you who are familiar with the portfolio a little bit, this video might not necessarily be for you, because it's generally speaking walking through basically how I get my dividends and what have you, and you can see there's a lot more charts on here than there are before, so that's for another video, so make sure you keep your eyes peeled. But what I generally do is I'll invest in, I think I have like 48 or 49 positions now, and what they basically do is once a month or 4 times a year or twice a year pay me dividends. And so what I do is I invest in 48 companies that then will either pay me on a quarterly basis, and I generally just track that. And of course, sometimes you get some interest from cash or what have you, but there are other stocks in here like AbbVie, BlackRock, some small bank companies, BP, which everyone might be familiar with, Johnson & Johnson. I invest money into those companies, and every once in a while they'll pay me a dividend. Like, for instance, let's take Johnson & Johnson, for example. So I recently just purchased some shares in Johnson & Johnson, I believe in June or May. And so I have to wait for the dividend date to actually show up. But once that actually happens, I'll be looking at about $23 or $24 every month. every quarter. And some of you might be saying, well, Matt, that's not a lot of money. But if you think about it, if you have 48 of these positions that are paying you $24 every quarter, and you have 48 of them, and they pay you every quarter, it starts adding up to be quite a bit of money. And so that's how basically you're able to grow your portfolio and actually get to the point where you're getting around $10,000 worth in dividends. Now, of course, if you just times 24 by 48, you're probably not going to get to the point where you're saying, that's $10,000. And I agree with you. A lot of these companies are paying me, say, $51 in the case of Pepsi, $57 in the case of Shell, $110 in the case of Wells Fargo. And another thing is, I reinvest these dividends most of the time, so this $110 isn't actually hitting my bank account. This $110 is going in and purchasing me out another 2.5 shares of Wells Fargo. And if you think about it, Wells Fargo pays, I want to say, 50 cents or so per share per quarter. And so what that means is they're generally paying about $2 a share every year. So if you're able to purchase another 2.5 shares with that, then immediately you're going to be able to increase your income by like $5 every single time you get a dividend from Wells Fargo. So next time I actually get a dividend, this will be not $110, but $115, $116. And you come to think about it, that's with all these companies. AT&T is doing the same thing. Once I get this $109 dividend payment, I'll be able to purchase about another 3 shares of AT&T, and the same thing will happen. I'm able to purchase those shares, and I think each share of AT&T pays around $2, I want to say. So if I'm able to get 3 shares, it's another $6 a year that I'm able to actually get. And boom, just from those 2 companies, I'm able to get another $11 a year in dividend income. And all I did was purchase at one time, either a couple years ago or over the course of several months, and your income just continues to grow. So you don't necessarily need to constantly monitor this. It's just going to happen while you sleep. Some people might like to hear, some people might say. But that's not to say that you should always just look for something with the highest dividend. That's where some people that I know have gotten into trouble before. And apologies, I'm not trying to direct you to certain things. I'm just trying to add dollar signs to some of these cells here, so ignore me. So that's not necessarily to say that you should be looking for the highest paying dividend. You should always look for dividends with some safety factors, and sometimes, not to say that always, but a lot of people that are dividend growth investors or just dividend investors in general look for things between 3 to 4%. And that's not to say that a company that has a 4% won't cut the dividend. That's not at all what I'm saying. But what I am saying is it's generally in a safer ratio than payout ratio than somebody that's paying, say, 10 to 11% in terms of dividend yield. And some of you might be asking, what's dividend yield? And if that's you, leave a comment down in the comment section below so I can get an idea as to how many of you guys even know what the heck I'm talking about in terms of dividend yield and payout ratios and all that jazz. So, but I hope this video finds you useful, or you find this video useful, and I hope it finds you well. For those of you who have not really looked at the channel before, I generally give monthly updates about how much dividend income I've made. And last month, actually, in the month of June, I actually made over $1,000 in terms of passive income, $937 or so just from dividends alone, and then over $100 in terms of YouTube income. So that actually put me over, I believe at the end of the month, it was $1,050. And so here I am looking for the next 3 months. Column M here, it actually shows September. Unfortunately, you can't really see because there's so many companies in here, but I know in September I should be looking for about $1,100 to $1,200 in terms of dividend income, which I am absolutely ecstatic about, because that's not even including, say, YouTube income, and hopefully that's in $100, $200 range as well. So I should be looking at about $1,300 to $1,400 potentially, fingers crossed, in passive income just in the months of September. And a lot of that is through continuous investing. I generally try to invest about $2,000 to $3,000 every month. And of course, not all that's going into, say, my dividend portfolio. A lot of that is going into my 401k as well. But just to give you an idea, every single month on the 15th, I put about $1,500 into my brokerage account. And as soon as I can early on in the year, I put in the $6,000 limit that I can into my Roth IRA. A couple years ago it was around $5,500. And that ends up being, close to $600 every month. So if you think about it, I put in $1,500 every month, and then I also put in the $600 to match my Roth IRA. And then every once in a while, when there's some money in my checking, I'll throw that in as well. So like I said, try to get around $2,000 to $3,000, and that's not even including what I try to put into my 401k either. And I generally try not to talk about my 401k too much because that's generally not what I track in these sort of videos. I generally just try to track what my dividend income is, and so unfortunately, because of the way the 401k is set up with Fidelity, I'm not actually able to see the dividends. So like I said, hope this video finds you well. There's a bunch of new columns in my yearly graph and also my monthly dividend graph that we'll go over in a different video. So this is a little sneak peek of what is to come with some of the future videos that I'm talking about. And generally speaking, I only look about a year ahead. So in the previous videos I was thinking about just 2020, but now I'm going to start trying to look into the 5 to 7 year range ahead to see if it helps a little bit and to see if I'm being too optimistic, pessimistic, or what have you. But the hope is to, and I don't know if I want to get too much into it right now, but the hope is to continue at about a 25% increase in dividend income per year for the next couple years. And I've been fortunate to be beating that, but of course, as the portfolio gets a lot larger, it gets a lot more difficult to increase the total portfolio size. But anyway, getting ahead of myself, and I hope this video finds you guys well. And if you have any video suggestions or questions, leave them down in the comment section down below, and I will talk to you guys soon. And if you stayed for the video this long, somehow, some way, my microphone decided to start working again. So hopefully, fingers crossed, the microphone quality is a lot better this time around. So I will see you guys in another video. Take care.